Well, back on deck after the Easter break, and it is the 27th of April, being a Wednesday. What's happening here is that the Dow Jones, the first one we're looking at, pushing up in what looks to be a fifth wave, and we were interested to see whether this was going to double top pre-Easter, and it's come back in an ABC, pushed down heavily, didn't even retrace to the previous support line, or in fact I could probably adjust that and it would show the retracement, which would be more accurate. Touching here, touching there, and of course almost touching there, pushing through. So that particular support line goes a long way back in time and is an important one, or the market thinks it's important. But the stock's over 0.5% up, and on the back of consumer confidence data, which rose something like 2.5%. Also Ford and Delta and a number of other of the majors pushed up heavily, and as a result our markets should follow suit. So as far as a projection, 12,650 odd would be the target for this particular fifth wave culmination. In the event that something goes on and it absolutely blasts through this line, then we'd be looking as high as 1,300. Certainly, if we just quickly go to a weekly chart, we can see that here is still the high on the left back in 2008 at 14,207. That's the 2007 high, and the GFC obviously running out. And then, whilst this is very messy in here, we can see that we've come up in this this very clear pattern. And what we're looking at is an extension of this particular run up here. We're down up for 1, 2, 3, 4, 5. So that is an extension of the particular Elliott wave pattern, and it looks like we're going to make that 12.6 or possibly even 1,300 in the event that it pushes through. Back to the daily, and also back to have a look at the US dollar. The overthrow is, on in earnest. The ending diagonal has not changed its essential shape, and in fact, from the Elliott perspective, we've got that down for 1, up for 2, down for 3, and culminating somewhere down here for 5. Certainly, the market force is still showing that we're in down mode. No sign of this particular line being taken out. But that would certainly be the confidence that in fact we've got a reversal here, and that will surprise everyone, because the moment the bears something like about 5 or 6%, that is 95 or 6% in terms of the bears. In other words, very small minority of bulls. Looking to the Aussie dollar, clearly it's broken out as well, and there is another sort of trend line that exists exists here. But what we'd be looking for is for a 61.8, 10,000, 1.10 or 1.10 to 1.115, which would be the culmination of that particular pattern as well. But there is strength, and it is continuing to push up and push up with pace. But the market force is showing some relative strength, weakness, and also the moving averages are starting to fold over, as you'd expect. I mean, this is just an extraordinarily powerful run since early March this year, when it pushed down to 96 or 97.1, in fact, on the strength of the Japanese earthquake. It's just done nothing but go up, and of course, it's not only a commodity push because of the strength in gold and silver, but it's also a carry trade in a higher yielding currency, the Aussie dollar being higher yielding than, say, the yen is, and people are borrowing in yen or borrowing in the low yielding currencies and pushing up our own, not only for capital gain but also for interest rate differential. So looking at the euro, I'm just going to go back quickly to the US dollar, get that picture in your mind, and then go to, in fact, the euro, which is the mirror opposite, and you can see that this 5-wave pattern is unfolding here. Is an ending diagonal. Just to repeat myself, that ending diagonals always end up back at their origin, so we'll be looking for eventually, once the pattern collapses, for a move back to 1.3, just as we'd be looking for on the US dollar, a move back up to about 81 there. So it hasn't begun as yet. So what's happening on the gold side? Gold has moved to the upper bound. This is the weekly chart, and it's moved to the upper reaches of its channel, which has been in place since early 2009. And you know, there's a bit of a doji star forming in terms of a weekly, but still we're only, you know, we've still got 2 days of trading to run, so that's certainly not a conclusive pattern in any shape. But what we are seeing is that it's respected this upper channel many times over. But when we do see the culminations of patterns, we also see them overthrow, and that hasn't occurred yet for gold. It certainly hasn't, and 115.77 in the event that that does break out would be the target before we'd see you know, a very significant correction and reversal. Looking on the Australian markets from the financial indices, this is the GEEK, the industry sector for financials. We talked about this support resistance line. Well, clearly yesterday's trade pushed up through, and in fact that was the 20th. That was the last day of trade, was the 20th. Today is the first day since Easter, and clearly it's going to be a strong day. You know, I just would be most unlikely for this not to continue, given the strength of those couple of candles. And the trick is to try and put a Fibonacci extension on that in order to get a gauge of the likely target, and that target is 47.30. So we're likely to see in the first instance a very strong move up to there, 4700, and in the event that it blasted through, this upper channel would be tested, and that coincides with the 1-for-1, so the length of this particular leg, pullback on up to 48.80, which again is another very round Fibonacci number. So certainly there's some action on, and next time we speak we'll expect to see this moved up into here. So just looking at the materials to get an alternate view. Well, in fact, before we go there, we'll have a look at the XJO, which of course this is the cash market. And last time we spoke I said we'd look for resistance around this long-term support resistance, and then a breakdown, and they were our targets, 46.30. Well, you know, it looks like we're going to get the reverse. So I'll leave this on for the next time I put this chart out. But certainly that upper trend support is going to be tested. Well, looks like it'll be tested in the event that today we get a work through of that, which I would think is highly on the cards. So 5,000 looks to be you know, a short-term target, and it's not far. There's the 5,000 mark right there. And finally, if I can locate the materials, have a look at that. Well, you know, clearly it did test an upper trend line. You know, this is a bullish engulfing pattern here. I would expect to see some up action today on the materials. And where would it go to? Well, up around that sort of 15,500 mark would be, in the event that we really do get this move up, would be that target for the materials sector, which means that, you know, a lot of our gold stocks and BHP, Rio, etc. continue to push up. And in fact, let's have a look at Amazon now to see what's happening, because it's just reported. And in terms of our Elliott wave pattern, you know, there's certainly been no breakout there, although this was a bullish engulfing candle pattern. But it reported overnight, and they said that they're expecting Q2 sales to be slightly less. Certainly volume has dropped off a bit down the bottom there, but you know, jury's out at this point. We'll just watch that with interest because it's often a very good bellwether for the overall market. All right, that's it, and we'll talk to you again soon.